Welcome, FinTech Talkers, to another edition of the FinTech Talk Show. I'm your host, Patty. My guest today is Veer Gidwaney, founder and CEO of Ansel. Veer and Ansel are on a mission to build a world where health hardships don't create financial burdens. It's a new type of supplemental health plan, which covers over 13,000 conditions. That's 13,000 conditions that are not covered by regular insurance. And it's built to pay benefits in the face of sudden health events. Welcome, Veer, to the FinTech Talk Show.
Thank you for having me, Patty. It's a pleasure to be here.
Awesome. I'm looking forward to this conversation. It's really impactful. And we'll talk some numbers around underinsured or things that are not covered and how that can create problems for folks. But before we get into all that and what you're building at Ansel, can you tell us a little bit about yourself and what inspired you to start a supplemental insurance company?
Yeah, well, happy to share a bit. So, I've been an entrepreneur since I dropped out of college. So this has been a journey
Wow.
I've been on for some time. And I think as each of the companies that I've been a part of, they've sort of increased in the impact that they're aiming to have. And specifically around health and benefits, it's a space that I've been in now for 15 plus years. The company that I co-founded and was CEO prior to Ansel, called Maxwell Health, was an HR and benefits platform that helped people choose their benefits and manage them more effectively. And while that company certainly had impact and it was important, where we saw there was an opportunity to have even more of an influence was to really think about how insurance could be better, as opposed to just enabling people to buy the products that are currently available to them. And that's where the concepts around Ansel started to come about, and here we are 5 years later.
That's great. College dropout, that usually means like a Bill Gates or Peter Thiel, like a big entrepreneur. That's usually a sign. So I'll look forward to that. And Maxwell, you exited on it, right? Can you share a little bit about it? Did you sell the company to someone?
Yes, that company was acquired in 2018 by Sun Life. Sun Life is a big insurance company specializing in group benefits in North America, in both the US and Canadian markets.
Awesome. Yeah, so very well on track. So repeat entrepreneur. Glad to have you here and talk about what you're building at Ansel. Um, can you break down, maybe in simple terms, how supplemental insurance work? I mean, my audience is fintech, a little bit of insurtech startups and people in the financial services, but supplemental insurance is a unique offering, kind of different from kind of the regular health insurance, and also talk about why people need it.
Yeah, so maybe we can start with the last part first, why people need it, and I think it'll then make more sense. But one of the biggest challenges with health insurance in America today is, first of all, that it's expensive. Premiums are high and typically tough for folks to budget for. But in addition to that, they've also reduced in value over time. And what I mean by that is that typically people have out-of-pocket exposure in the form of a deductible that is beyond what they can usually afford. So if you have an unforeseen medical event, you go to the hospital, you need treatment. If you've got a deductible of, say, $4,000, you're on the hook for that $4,000 before your health insurance kicks in. Now, for complex treatment, the ultimate bill from, to the health insurer might be tens of thousands of dollars. So clearly you're not paying most of that. But for most people, even to afford that deductible is beyond what they have in liquid cash savings. And in addition, when you have an unforeseen medical event, the expenses you might be exposed to are not just health related. You might need extra childcare, you might need special transportation, you might have lost wages at work. So there's financial impact that needs to be addressed. And the unfortunate thing is that for most people, it's tough to deal with that financial challenge. Roughly a quarter of folks skip medical care because it's too expensive.
Wow.
100 million Americans have medical debt, which is a really a staggering number. Every time I cite it, it sort of shocks me. And that's largely due because of this problem. Interestingly enough, almost 20% of people who take money out of their 401k early are using it to pay for health-related expenses. So that's the problem that we're trying to deal with. So supplemental insurance is intended to pay out cash for an unforeseen medical event, and you can use that money in any way that you see fit. Now, this is not a new category. In fact, supplemental insurance has existed for 20 or 30 years. I'm sure many of your listeners and viewers have seen advertisements on TV from companies that sell supplemental insurance. And most of them, of which there are dozens of companies, are fairly similar in the products that they sell. And one of the challenges in those products is that they actually don't cover very much. I'd argue that they're somewhat poor insurance products. And because of that lack of breadth of coverage, they get utilized fairly minimally. And the amount of money that sort of goes back to the insured for every dollar of premium, how much is going back to the insured is relatively low. So that to us was eye-opening because this problem continues to get worse, and the current solutions don't seem to have product market fit anymore. They were designed to solve a different problem, and given this new era, they're challenged. So we went back to the drawing board and built a brand new supplemental insurance product. You highlighted that it covers 13,000 incidents, conditions and illnesses. That's a lot and far more than what the incumbents cover. And it results in a much higher level of utilization and much more value to the end consumer. And at the end of the day, when you think of our mission, which is to create a world where health hardships don't become financial burdens, what we want to make sure happens is that if something happens to you unforeseen, we're getting money to you as quickly as possible so that we can help alleviate that challenging situation with at least a little bit of capital.
Wow. So the product exists, but and it's needed, but it's kind of not optimal, or it's not the best. And so it's kind of almost a perfect storm for disruption or the innovation that you're doing. So, but real quick on the case you made around debt and medical debt and people borrow from 401k, I didn't know that. And you quoted some number. Let's go back to that. Is that like how many million Americans actually borrow for their health expenses?
Well, right now, over 100 million Americans have medical debt, which is roughly 41% of adults. Now, of course, the amount of debt will obviously vary, but even if it's a little bit of debt, right, that's on your credit score. You're trying to get out from underneath that. You're spending time maybe arguing with insurance companies on whether that debt is valid or not. But it's such a broad number that all of us know somebody that has medical debt and is dealing with that challenge.
Wow, that's a lot. 100 million out of like 360 or 380, I think is the current population. And that's a lot in terms of, and how much are these debt typically, the medical debt in a dollar amount, or is there an average dollar amount?
Typically hundreds of dollars, but for many folks, it certainly can mean the thousands or tens of thousands. I mean, this is from a Kaiser Family Foundation report from last year, so it's very recent data. And I'm sure this problem is not getting better. It's almost certainly getting worse. Yeah, like I said, that's a real challenge for people. And it just goes to show that while we live in a relatively wealthy country, sort of at a macro level,
Hmm.
for most people in the middle class, there is a struggle to deal with their day-to-day expenses. And it's not that it's hard to deal with planned expenses. Even that can be challenging, but planned expenses, at least you can foresee them. You can make arrangements to handle it. It's unforeseen problems that are really a big challenge. And medical issues are very high on the list because not only does that cause a financial impact, but it may also impact your ability to earn your needed wages on a weekly, monthly basis. So I think that when folks are at the kitchen table talking about economics, it's almost impossible to avoid the expense around health insurance premiums and out-of-pocket exposure. I think it's something that people are clearly very well attuned to and aware of.
Yeah, and you talked about the two different things, right? So there is that deductible, and some of these plans have high deductible, and that's an affordability gap. And then there are these uncovered conditions, which traditional insurance does not cover. Is that because of it not being kind of still accepted, or why are certain things, the 13,000 conditions, not covered?
I should clarify. Your health insurance covers everything that we cover as well. So there's no sort of challenge there in particular. What I was referring to is that when you look at the supplemental insurance carriers that are selling in the market today with what I'll call the incumbent or traditional products, they actually don't cover very much.
Gotcha.
And that's where Ansel comes in with a more broad solution. And I think the other point, just to reinforce, and you were mentioning this, that there's on the one hand the exposure people have to their high deductible. The other side of it, though, is that there are expenses that come with getting sick or injured that have nothing to do with health care, right? So if you break your leg and can't drive your car, and as a result can't take your kids to school, or you can't get to the grocery store, then maybe you need to, have a car service, or hire more Uber drivers to take you places, right? So those are expenses that are unforeseen, and that's where a check from Ansel can really make a difference, because we're sending that money directly to the insured. How they use that money is absolutely up to them. And that's what gives them sort of a lot of flexibility to be able to address their financial challenges.
Yeah, no, in auto, or when you have an auto accident, yeah, you get some money towards a rental and things like that, but that's not the case in health, like you rightly point out. But and you give that flexibility, so you're giving cash, and kind of gives the customer, or the client, or the consumer, kind of the freedom to spend it where they deem necessary. So let's talk about that. Seems to be the main differentiation, but there probably are others. So let's talk about Ansel specifically. How does your company differentiate itself from these traditional insurance providers, including other supplemental insurance providers?
Yeah, there are a few key areas. One we've talked about a little bit is just sort of the breadth of what we cover. So to put it into perspective, 13,000 injuries and illnesses is a lot. It's no doubt about it. But by comparison, if you take a population of 100 people, typically the incumbent products in a given year will pay a claim to 1 to 5 people. So 1 to 5% of individuals will have a claim paid in a given year. Ansel, on the other hand, is closer to 22 out of 100. So
Wow.
that just gives you a sense of how much more our product is covering. So that's sort of one key innovation. The other key innovation is how we've been able to automate the claims experience. So, for most people, when they think of insurance and how to use it, they ultimately arrive at, wow, I'm sure filing a claim is going to be hard. And I'm certain that the insurance company is going to make it difficult for me to get a claim paid. Now, that's not certainly always the case. It isn't. I think most companies are trying to do well by their customers, but that's the impression people have, right? So when we think about innovation in this space, making claims really easy is important. And we've really, I think, taken that to the ultimate level. So to put that into perspective, today, 3/4 of our claims are paid proactively and automatically. So just to be clear, the insured does nothing to receive a claim. And in fact, often when they receive a Venmo or PayPal from Ansel, they're a little bit surprised. They don't necessarily know why they're getting this. They might have forgotten about their coverage, and that's precisely why automated claims are really helpful. Because when you have an unforeseen medical event, yes, of course you're thinking about your claim, but you're first and foremost thinking about recovering, right? And your family and the support they need. And so it's easy to forget about this. So the reason we can automate and proactively pay claims is because a key innovation of our product was to tie our insurance product as closely as possible to the health plan. And specifically, the way we do that is by tying it to the medical claim. And every single medical claim, wherever it is in the world, has an assigned diagnostic code. So if you go to the hospital and you have an appendicitis, there's a diagnostic code for that, and it's the same code used in every single hospital all over the world. It's an international standard. Ansel covers 13,000 diagnostic codes. So so first of all, there's no ambiguity on whether we pay a claim. If you had an appendicitis with that diagnostic code and it's one that we cover, we pay the claim, really no questions asked. But the way we can automate it is because for many of our clients, we're able to receive their medical claims data on a regular basis. We review that medical claims data through our technology and our platform. We identify payable Ansel claims, and then we automatically send out payments. It sounds really simple because it is really simple, and it's highly automated, and it's really sort of core the innovation in this product. And I think it just goes to show that in insurance innovation, it's really important to bring together both technology innovation and insurance product innovation at the same time. So when we designed this product, knowing that we could pull those two levers, it enabled us to just think a lot more creatively about solving this problem. A lot of innovation in insurance either it doesn't include one of those components. And in fact, there's very little innovation that's happening in insurance product design, where Ansel, I think, has really pushed the envelope. When we went back to the drawing board, we didn't say, hey, here's the incumbent products. How can we make them a bit better? We said, let's assume the incumbent products do not exist. And we were just trying to solve this problem from scratch. What would a brand new insurance product be like? And of course, there's lots of challenges to that because this is a highly regulated industry. So if you design a new insurance product, every state has to approve it before you can sell it there. So it's subject to that scrutiny. But now, a few years later, we're approved in 45 states roughly across the country. And I think the reason that that's happened is that state insurance departments are ultimately trying to look out for the best interests of their citizens. And you can't go to any state department of insurance without talking about the fact that health insurance is expensive and challenging and a real impact on people. And so when we brought this product concept to different commissioners across the country, there was a very positive receptivity, and that's really empowered us to be able to bring this to folks across the country.
No, awesome. And I was just a kind of a sidebar. I was at a conference, AI conference last week in Vegas, the Human X. It was the first. And every company, all startups, a lot of good, smart people building agents and automating different things, or they could automate any problem, so to speak, kind of all knowledge work, for example. But what I love about you is that you have this domain expertise in insurance. You kind of know where the product gaps are, and you're applying technology, like you rightly said, and maybe some of it is AI, maybe some of it is agentic. But agentic is more of a buzzword. You're applying it to create value in this claims automation. So the automation that you're building is probably ahead of the curve in what some of these other AI companies are doing. So are you using some of the kind of language processing? I know you talked about the CPT codes and ICD codes and that forming the basis of approval, and that streamlines. But are you doing more language processing and that kind of stuff as well?
We are experimenting with certain capabilities. So, I mentioned that 3/4 of our claims are paid proactively and automatically. So that means a quarter of them are not. Those quarter that are not are typically because, a member is submitting a claim through our mobile app to us. And we make it really easy, by enabling them to take photographs of anything available at the point of care. So if they have a prescription, they can take a picture. If they have a cast, if they have, discharge papers from the hospital, we'll accept any of that. And we try to we endeavor, and we're successful, to identify the diagnostic code from those sort of photographs they send us. As you can imagine, there is technology there to large language models to automate that. So we've been experimenting with those sorts of capabilities. Like most sort of companies that are forward thinking around the country, we're leveraging AI to make our own teams as efficient as possible, whether it's building technology or in other processes. So yeah, where it makes sense, we certainly are. But in some cases, it's just sort of much more simple than that, right? We designed insurance product. It covers 13,000 diagnostic codes. If you have diagnosis, we pay claim. Like, it's really very straightforward. And I think often we overcomplicate things.
True, true.
So many of the incumbent insurance companies are trying to achieve automation, but they're rate limited by the contracts that their insurance products are based on, because those contracts are subject to a lot of subjectivity. And when you're subject to that, it's hard to automate. So when you design an insurance contract that is much more objective, it's not only easier to automate, but it's actually much simpler for the consumer to understand and get value from. We see this ultimately in our net promoter scores. So we have an NPS in the high 80s,
Wow.
and it's been there now for over 18 months. That is an extraordinarily high NPS for any company,
True.
but it's basically unheard of in insurance. And I think that's happening because we've automated this experience. And like I said, that's in large part due to insurance innovation.
Yeah, there was a lot of negative press around insurance last December, I believe, with one of the large insurance companies, and there was some unfortunate incidents and stuff. So it's really kind of pleasant to see where that you have NPS of 80, meaning customers love you and promote you to others. And as you said, it's kind of unheard and kind of in the insurance industry. So you must be doing something really good or really beneficial to the customer at the same time, kind of keeping that economic balance because obviously you need to be profitable or the insurance product needs to be profitable. So love to talk about that as well. But maybe switching gears a little bit. So you like fintech, I've written quite a bit about this and talked about this, right? And fintech and insurtech is mostly innovation on the distribution side. It's very seldom on the factory or the product, which you are doing. Um, and there's some customer experience or journeys kind of streamlining that, which kind of is tied to the distribution aspect. But in the management framework, the Drucker and others, so you have those three dimensions. Maybe risk is a fourth dimension, but you have the customer experience improvements, you have distribution improvements or distribution streamlining, and then you have product innovation. So you do have product innovation and customer experience. It's kind of easy, and you can scan and send, and it's automated. What about the distribution? Who's your target customer and how do you market to them and what's your secret sauce there?
Yeah, and before I answer that, Patty, just to comment on your last points, I think that a lot of distribution innovation, risk and underwriting innovation, all make a lot of sense if you're distributing and underwriting a fundamentally good product that's very useful, right? When we looked at this problem, it made no sense to focus on those parts of the value chain because all we'd be doing is making it easier to buy what are relatively poor products. So, what's the point of that, right? I mean, what are we wasting our time doing? We'd much rather build a better product. And as it turns out that when you do that, it also becomes easier to sell. I mean, mostly if you can show people how you're delivering value to them, they are more likely and excited to buy it. And I'll give you a good example. In our space, if you look at the incumbent products, they're very rarely funded by the employer. So if you think of employee benefits, when you buy benefits, during open enrollment, you think of your health insurance, your dental insurance, your vision insurance, your disability insurance. Those products almost always have at least some employer funding. And in
Mhm.
fact, in most cases, they're funded in the majority by your employer. So if you think of your health insurance, most people don't pay a majority of their health insurance premium, their employer pays it. All right. Now, if you look at supplemental insurance, products like critical illness or accident insurance, the products we compete with, they almost never have employer funding. So if you think about making distribution easier, one way to make sure that people want your product is if their employer is subsidizing it. So if the employer is not subsidizing these products because they're not good insurance products, then it makes distribution harder, which means you have to think about innovating on distribution. But if you make a good product that employers want to fund, then more employees find it more accessible and they buy it. So, for example, for our company, over 40% of our premiums are employer funded.
Wow.
That is, compared to the incumbents who are, negligible. So that's sort of the first thing. Build a good product, and the wheels tend to get greased on their own. That said, to answer your question, employee benefits are Largely most people get it through their companies, and those employers typically work with brokers. And there are, thousands of brokers across the country, brokerage firms across the country that specialize in helping companies come up with their benefit strategy and then sourcing products from insurance companies. So we have sort of the added challenge of having to compel those brokerage firms to want to partner with us. And that change isn't easy. I mean, you speak to lots of entrepreneurs, I'm sure, and there are entrenched distribution channels they have to work with, and showing them why this is better is hard, because sometimes it's easier to just sort of keep doing what you've always done. If the customer's not asking for this new product, then why spend the effort to bring it to them?
Right.
So it's upon us to find the thought leaders who are willing to say, hey, you know what? This problem is really bad. The debate around health insurance is getting very shrill. To your point, just the recent coverage in December, but that's not going away.
Hmm.
And who has, sort of mission alignment with us to want to solve this problem? And so we don't have to work with everybody. We just want to find the folks that are really focused on trying to do best by their clients. And I think that when it comes to that, the track record we've been able to demonstrate, the statistics around how our product operates, the case studies we've published, make it very clear and undisputed that this is a fundamentally better product for the consumer. So if you're a benefits consultant or decision maker and you want to do something that's fundamentally better for your employees, then we'd love to work with you.
No, totally. And you said 80% NPS, and that there's a direct correlation to ESAT or employee satisfaction, right? So and big employers, small employers, medium-sized employers, they all want high ESAT because that's directly tied to productivity of the employees. So something like what you are doing, if offered to all employees, will definitely help with kind of increased ESATs, because I think a lot of people care about these things, these unforeseen medical events, and how whatever they have in terms of insurance and supplemental insurance helps them kind of break through. And so that's a great story. And I don't see it being difficult to sell, meaning I'm sure you're getting a lot of good reception on that self-insured or as an add-on benefit. And yeah, I know that the value chain's kind of complicated. You don't directly talk to employers. You have to go through the brokers and they make the case, so to speak. But looks like you're well entrenched in that ecosystem.
Trying our best. One of the best sales tools that we have is something we call a claims incidence analysis. And why it's so effective is that if as an employer you can tell us your medical claims history from a prior period, say from last year, we can tell you how Ansel would have performed, which is a really powerful tool, because just gives an employer a sense of, hey, if I had this last year, like this is the kind of value that my team would have received. It really puts into perspective, where this product can provide more value than the incumbent solutions.
Perfect. Yeah. And that simulation, and maybe it can tie to ESATs too, how the employee might perceive that kind of benefit if they had, and if they don't, and how kind of loyal will they be to their employers. So
That's
no,
right.
that's a great kind of tool. Looks like you have kind of made a lot of progress, both on product, on distribution, on using the technology. So where are you on the startup life cycle? Do you want to talk a little bit about that, and what are maybe some of your next immediate milestones, who you're trying to connect with, and so on?
Yeah, I mean we're early in our journey. We're sort of in our fifth year, and we've raised 3 rounds of venture capital, and certainly are sort of well capitalized to be able to pursue our mission. I think the most important milestones for us right now are to just expand the number of people who have our policy, right? And that's really what we're focused on. We also, a key part of our business model is to partner with other insurance companies to enable them to bring their own versions of Ansel to market. So the platform we've enabled can run, multiple versions of this product for different insurance carriers. So part of our thinking is that, if we want to be able to penetrate the market, if we want to be able to bring this to as many folks as possible, then finding allies who want to work with us and share in our mission and what we're trying to do is it just feels like a good strategy all around. So that's certainly been a big part of how we've gone to market.
Yeah. So I have listeners in the large insurance firms. So if they're listening, that would be a good reach out to see if there's a potential. They could be the factory for you, so to speak, or a partner sitting behind you, right? You have a strong distribution. And on the customer or the employers and corporates that you're targeting, are you targeting the top tier, like the big techs and the big banks, or are you targeting the mid tier? Or a little bit of both, or where's your sweet spot?
Yeah, but before I answer that, Patty, just a clarification. When we work with other insurance companies, we actually provide the back end, and they are more so taking on the responsibility of the go-to-market. So their sales teams
I
would
see.
sell their version of Ansel through brokerage firms they work with or to existing clients they have. So it's a bit the reverse.
Interesting. Okay,
Just to
thanks.
be clear, but to your question on who benefits from this, um, literally everybody that's in the middle class, I would say. Regardless of whether you're at a very big company as an employee or a smaller one, the kind of health insurance you have, for the most part, is similar, and the challenges are very much the same: higher deductibles, out-of-pocket exposure, and as a result, companies of any size are good potential clients of ours because they have employees that are likely to benefit from a product like Ansel. So we work with companies as small as 5 people. We're fortunate over the last year to bring on our first 3 Fortune 500 clients. So there's a range there.
Gotcha. Yeah. No, thanks for the clarification on the insurance. So you are the underwriter. Is that, did I get that right? Of the supplemental insurance?
So let's dive a little bit deeper. So we can be, and often we are, but when we partner with other insurance companies, they are the underwriter. It's their product filed on their paper, it's their brand, and it's their salespeople selling it. So what we're providing is everything else. So running that product, enabling it to go through an enrollment process, all the data that has to flow, operating claims, dealing with member service related questions. So sort of the underlying platform that runs their version of the Ansel product is what we do. But they're taking on the risk. It's their brand and it's their salespeople bringing it to market.
Gotcha. So it's kind of the end-to-end system, not just kind of the distribution piece. It's the actual core insurance platform that you have built kind of end to end, and somebody can use it and kind of instantiate it for their own distribution and promotion.
That's right. And it's a highly automated platform. I mean, you alluded to this point earlier on. When you pay out a lot of claims like we do, then you have to run it very efficiently and build a platform that makes the unit economics really work. And that's one of the big drivers behind why we sort of took it into our own hands to ensure that we built that platform. And it's on top of Salesforce, which is sort of the data underlying infrastructure for the platform, and that just gives us a lot of flexibility and scale to build on top of that and create the right experience that we're looking for.
Gotcha. So like cloud and SaaS and that kind of stuff, and easy to kind of replicate. No, that's great. Meaning, I think you've done a lot of the plumbing. Meaning, I work and talk to a lot of startups, and my phone goes off. Um, and what the plumbing you have done seems like quite a bit, and that's awesome. We'd love to keep going on and talk more details because you've done a lot of good stuff, and maybe we have to have you back. But in closing, may I want to just step back, and you're innovating in a very specific thing. You know the domain really well, you know the challenges, you know the gaps, and you've already built kind of solutions to cover that gap. But if I ask you, where do you see kind of the future of supplemental insurance or insurance, healthcare insurance in general? I know that's like a hot topic even at the highest level in politics in the US. So where do you see that going in the next 5 to 10 years, and how Ansel may play a role in that kind of evolution?
Well, on the topic of health insurance overall, healthcare is too expensive, and as long as it remains expensive, insurance will be expensive. I mean, there's really just no way to sort of think about that any differently at the end of the day. But also, I think it's worth mentioning that, the United States is the only healthcare system in the world that isn't a single payer system, major system. I think there's bears to be some correlation to the fact that we have the most expensive system without the best results. So I think there's something to be said there. But in the absence of the kind of reform that's needed to address those sorts of cost challenges, then people are going to continue to face their own expense challenges related to healthcare. And if I were to predict what the future of supplemental insurance is going to look like, it's going to look a lot more like Ansel, undisputably. It's just a fundamentally better product that solves this problem more effectively. And it may take time to get there, but ultimately, I think the distribution channels, the allies that we aim to work with are starting to see that and appreciating the innovation that we've brought to market. And our aim is to be collaborative and to work together. We almost certainly cannot serve the needs of the market on our own. Like there's just no way. So we need people to work with us and to be a part of this mission. And we're excited to work with anybody who shares that.
Yeah, I love the confidence, and I can see why. You kind of know the space you built, and you built the end-to-end systems. You've already got a lot of traction. So I love what you say that the future of supplemental insurance will look like Ansel, and love that. I know we talked about you're trying to reach others who want to kind of get into Ansel as a potential employee benefit companies, but who else are you looking? Are you hiring? I have a lot of kind of founders and engineers and that kind of audience. Um, so talk a little bit about who else you're looking to connect with. Are you looking to raise another round? There are a lot of VC listeners. And where can people find more information about Ansel and connect with you on the usual social media sites?
So we're always looking to meet people who want to work with us, whether it's other companies, whether it's talented individuals, whether it's investors. We're open to those sorts of conversations. Absolutely. And in terms of reaching us, we're at joinansel.com. I'm just Veer at joinansel.com. Very simple. And of course you can reach me on LinkedIn, and pleased to connect.
Awesome. Thank you, Veer. Veer's building the future of supplemental insurance with Ansel and his team. Thank you, Veer, for being on the FinTech Talk Show.
My pleasure. Thank you, Patty.